Hey everybody, welcome back to Whiteboard Finance. My name is Marco and I'm here to help you master your money and build your wealth. Normally I don't dive into politically charged topics such as the Inflation Reduction Act of 2022, which is what our video is about today, but I think it's important because it's touching on a topic that we've been discussing for a long time on this channel, which is obviously inflation. So in this video, I'm going to help you understand the Inflation Reduction Act, briefly explain what's in it, and touch on the Penn Wharton Budget Model and the conclusions that came from that. As always, stay until the end of the video for my thoughts and how to benefit from this. Stay tuned. Okay, number one, what is it? So the Inflation Reduction Act of 2022 is designed to reduce the deficit and lower inflation while investing in domestic energy production and lowering healthcare drug costs. So in essence, the legislation is a scaled down version of the Build Back Better Act proposed by the Biden administration in 2021. According to Senate Democrats, the proposed legislation would raise $737 billion, require total investments of $437 billion, and result in a deficit reduction of more than $300 billion. I will break these numbers down a little later in the video. The bill allows Medicare to negotiate lower prescription drug prices and extends the expanded Affordable Care Act program for 3 years through 2025. Now, let's get into understanding this bill a little bit better. Okay, so let's understand this bill a little bit better. So according to the White House, the Inflation Reduction Act would make the single largest investment in climate and energy in American history. Spending is designed to lower energy costs, increase cleaner energy production, and reduce carbon emissions by 40% by 2030. So some people are saying that this is essentially just a climate bill under a different name. It's almost as if they're using a pressing issue like inflation to stuff a bill full of things that they want to get passed. One of the things that the bill will allow is Medicare to negotiate lower drug prices. Although there are limits to both the number of drugs affected and the time frame involved, a quick example is a $2,000 annual cap on out-of-pocket drug costs. Affordable Care Act healthcare premiums expect to be lowered for millions of Americans under the legislation for 3 years once the bill becomes law. So here's the almost $1 trillion question, the $737 billion question. Where is this money coming from? A significant funding source for programs in the legislation will be a 15% corporate minimum tax on companies making more than $1 billion per year. In the meantime, the new bill imposes no new taxes on families that make $400,000 or less or on certain small businesses. Since this bill is literally 755 pages long, let's try and break down what's in it using some images in the next slide. Okay, number 3, what's in the Inflation Reduction Act? So for simplicity's sake, check out this graphic here. As mentioned earlier, the total revenue raised is expected to be $737 billion. $222 billion of this is coming from the 15% corporate minimum tax, which I just mentioned. $265 billion is supposedly coming from the prescription drug pricing reform. $124 billion is coming from IRS tax enforcement, which we will mention at the end of this video in depth. $74 billion is coming from a 1% stock buyback fee, and $52 billion is coming from loss limitation extension. The total investments from this bill would be $437 billion. $369 billion of that would go to energy security and climate change. This is why people are essentially calling this a climate change bill with little to do with inflation itself. $64 billion would be going into the Affordable Care Act extension, and $4 billion would be going into the Western Drought Resiliency. This is for a total deficit reduction of a proposed $300+ billion, as mentioned earlier. The Inflation Reduction Act supposedly touches on these 8 things, and if you want to look into these things more in depth, simply pause the video. Number 1 is that it expands Medicare benefits. Number 2 is that it lowers energy bills. Number 3 is that it makes historic climate investment, which we mentioned earlier. Number 4 is that it lowers healthcare costs. Number 5 is that it creates manufacturing jobs. Number 6 is that it invests in disadvantaged communities. Number 7 is that it closes tax loopholes used by the wealthy. And number 8 is that it protects families and small businesses making $400,000 or less. I am simply reading off the democrats.senate.gov one-page summary of this act, and I will give my opinions on this in the My Thoughts portion of the video. Okay, so let's talk about the Penn Wharton Budget Model. So one study often cited by critics of the Inflation Reduction Act of 2022 was conducted by the Penn Wharton School at the University of Pennsylvania. Here are some key takeaways from the actual Penn Wharton Budget Model from wharton.upenn.edu. So I'm gonna throw this up on the screen so you can follow along. Here's the quick summary. The Penn Wharton Budget Model estimates that the Senate-passed version of the Inflation Reduction Act would reduce non-interest cumulative deficits by $264 billion over the budget window. The impact on inflation is statistically indistinguishable from zero, aka it doesn't do anything for inflation. GDP falls slightly within the first decade while increasing slightly by 2050. Most but not all the tax increases fall on higher income households. So the Penn Wharton Budget Model estimates that the Senate-passed Inflation Reduction Act as written would reduce this by $264 billion over 10 years. So the act would have no meaningful effect on inflation, which we talked about. It would actually reduce inflation by around 0.1 percentage points by the middle of the first decade. These point estimates, however, are not statistically different from zero, aka it's not gonna do anything, indicating a low level of confidence that the legislation would have any measurable impact on inflation. Relative to current law, the act would slightly reduce GDP in the first decade while slightly increasing GDP by 2050. So these estimates include the impact of debt reduction, carbon reduction, and tax incentives on investments and working hours. Most but not all of the tax increases fall on higher income households. However, future generations, including high income households, gain from the improved economy, including a reduction in carbon emissions. Now let's get into the fun part of the video, which are my thoughts and how to play this. Okay, my thoughts. So in reality, there are several flies in the ointment. The Inflation Reduction Act is a catch-all Trojan horse that contains several pieces of legislation having nothing to do with CPI, aka consumer price inflation. This is essentially a climate bill under the guise of being an inflation control bill. Check out this screenshot from Secretary Janet Yellen. $80 billion is for funding for the IRS. Their current annual budget is only $13.7 billion. 87,000 new auditors are being hired, which would more than double the existing size of 74,454. This is for conducting audits and uncovering instances of tax fraud. This may actually affect the middle class much more than larger corporations because the IRS knows that the average middle class person doesn't have the means to protect themselves or shield themselves from this level of increased auditing and scrutiny. Wherever there is fiscal spending, this is point number 2, wherever there is fiscal spending, an increase in taxes will follow. This is common sense. Funding to fight climate change is fiscal spending. Prescription drug price reform will include lobbying and, of course, fiscal spending. Affordable Care Act subsidy extension, fiscal spending. IRS tax enforcement, 87,000 new officers, fiscal spending. Drought funding for Western states, fiscal spending, and a corporate minimum tax rate of 15%. This has been played out several times already throughout history. It starts with $1 billion in revenue as the threshold. Next year, it'll be $100 million. Tomorrow, it'll be businesses making $10 million or more in revenue, and they need to pay an additional tax. It never ends. So in my opinion, there are always buzzwords and talking points that are used to stuff bills like this full of pork, such as ESG, climate change, the war on terrorism, war on drugs, et cetera, et cetera. Knowing this, how can you position yourself? So if you've already built up a chunk of wealth, I would look into monetary debasement hedges such as Bitcoin and gold. Number 2, I would take a look at TIPS. These are Treasury inflated protected securities. These are bonds that are issued by the Treasury whose yields rise and fall with CPI. I've actually invested into I-bonds, which are adjusted twice a year to keep up with the stated CPI. I-bonds aren't TIPS, but they're essentially where my emergency fund lives. So at least I'm not being eaten alive by inflation. And then number 3 is short-dated US Treasury debt, typically 3 months to a year. They're usually a safe bet and you're considered to be in cash. However, you have at least better rates than a savings account. So hopefully you got value out of this video. What are your thoughts on this Inflation Reduction Act? I wanna know, comment down below. And then also remember to sign up for Whiteboard Finance University. It'll be live in about a month and a half from now. It's gonna be a university full of professors with different subject matter experts. It's going to be an unbelievable value for the price that I'm charging. It's gonna be a huge community of a bunch of people. I can't wait to launch it. So as always, I hope you got value out of this video and have a prosperous day. So I'm taking my private jet to Davos, which burns 8 bajillion gallons of jet fuel to transport maybe 10 to 15 people and a couple pilots. But we really gotta fight this climate change, you guys. We really gotta fight it. Is the jet ready?